What is up, YouTube? Happy Declaration Day. This is the Working Investor. In this video, we're going to go over some of the YieldMax distributions. We're going to go over some of the Defiance and ROUNDHILL distributions. And we're going to talk about what I'm going to personally look into going forward. This is just my personal decision. This is not financial advice. Just here to share my thought process with you guys. So, as you can see here, YieldMax paid 24 cents. I'm sure you guys could read. But just in case, if you guys are not in front of the computer, I'll read it out to you. So it was 24 cents, which is really amazing because given that the share price is less than $24 a share, that's more than 1% return in a week. That's more than a 52% annualized return. Well, they kind of give you the cheat sheet right here to tell you it's a 69% annualized return based on that distribution. Like I said, with YieldMax and YMAG, they're lagging 1 week, so they're reflecting the payments of YieldMax of Group C. And last week in Group C, we had Cone, we had a lot of great payers, so those cover call ETFs are reflecting in YieldMax. YMAG is only 6 cents. That's because it's only reflecting MSFO, which is Microsoft. It's only one ETF, and it's not the highest payer one out there. So that's why it tends to be, you'll notice a cycle that week D, you're going to notice YMAG is a little bit less. Then we have Misty. Oh my goodness, $4.42 a share, or 135% annualized return. Anything over 100%, I kind of highlighted so you kind of could see it a little more clearly. We got YQQQ, which is the inverse, and they're paying 23% distribution of a whopping 32 cents. We have AMZ. Thank goodness, this guy kind of revved up pretty nicely. $1.17, 75% annualized return. And I showed you in my previous video that AMZ did a great job with their call. They did a great job with their cover call writing because they almost captured the entire total return of the underlier. So that's pretty good. Aptly paying a 24% distribution, which is typical for them, which is equivocal, comes out to be 33 cents. Again, Apple, they did a great job, even though the distribution is not insanely high, but it's pretty decent. They have definitely done a great job. They've actually total return in the past quarter have outperformed the underlier. Then we got IWY, which is over 100% yielder of 80, almost 86 cents. Disney, great distribution, 70 cents, 51.25% annualized return. Square or Squee, $1.66, actually almost $1.67, and it comes out to be 100.06% yield. And SMCY, even though it had a pretty significant drawdown, it's $2.20. They're still able to give back to the shareholders, which comes out to be 100.24% yield. And these are the YieldMax distributions. So I am building up more into YieldMax, into Misty. I got it, I'm building up a little bit more and then I'm going to get in some more on the ex-dividend date to build up into it. I would not go, I want to go really heavy, but unfortunately, with peak prices, I'm just going to kind of nibble a little bit and then see how we go. AMZ, kind of going to nibble a little bit, build into the position a little bit more. It's trading around $20 a share. And then SQY is a new position that I'm going to be building up. I'll give you the reasons why I'm building up SQY. So number one, from a total return standpoint, if you go to Seeking Alpha, year over year, even though they have a net decrease in price of 8.33%, total return 56.72%. The S&P 500 roughly 31% year over year. So they're almost double the S&P 500 year over year total return. So for me, that's an income fund. So that's one of the big compelling reasons why I start looking further into this fund. And if you go on Google Finance, I always recommend looking at Google Finance. Look on the underlying, which is Block, that's ticker symbol SQ. When you go shopping, sometimes you'll notice you use this interface to pay for your transactions. So you could see here this company is worth $56 billion. So it's not a tiny company. It's pretty big. Not in the trillions, but definitely in the billions. And you could see, the blue is the revenue, the orange is the net income. You could see that they're positive in revenue, positive in net income, positive revenue in the billions. And if you keep going down onto the balance sheet, you'll see that their balance sheet looks pretty good quarterly. They ebb and flow here and there. But again, we're going into the holiday season, so I'm sure consumer spending will go up, so that could possibly be a positive factor. But you could see here that their metrics look pretty good. Return on capital looks good. So it seems like a pretty solid company in my mind. I'm not telling you to go into it, but that's why I felt like I'm going to start opening up a position. I do want to capture some of those dividends. They are trading at all-time high of $21. So I only got in about 50. I'm doing the blended style. So I want to get 100 shares. So I have 50 shares today and I'll get 50 shares tomorrow on the ex-dividend day to kind of ease myself in, and I'll have a blended cost basis, and then I could just kind of use a dividend distribution to buy a few more shares. So like the second shoe will drop and I get some more shares. Let's go ahead and talk a little bit about the Roundhill and Defiance funds. And we're going to take a double down focus on the Russell of those two funds. Why am I looking at the Russell? Because the Russell tends to have a little bit more implied volatility. And from all the Defiance funds, the Russell has the greatest ROI. So you might as well just look at that, and then you could make conclusions on other ones. Let's take a look. So you can see here IWMY and RDTE. These are the two Russell ones, and they're different strategies, different companies. So it's not obviously totally different funds. But they're both working on the underlier of the Russell 2000. So IWMY does in the money puts, and RDTE does out of the money calls, synthetic cover calls. And they do it pretty much 0 day to expiration, and then Defiance sometimes have the opportunity to do 0 day or 1 or 2 day, or like sub-weekly. And you can see here the price is $32.38 for IWMY and $43.59 for RDTE. I'm talking about the price because when you see the dividend distribution, if it's, you could see relative to the price what the distributions are. So let's take a look over here. So here in the bottom, you see that, and they both pay weekly. So let's put that into consideration. So you see here 32 cents is what IWMY is going to be paying. So it's approximately 1% return in this week, which comes out to be roughly, 52% annualized return-ish, somewhere in that range. That's IWMY. And then if you look at the Roundhill, so here you have the announcements of the XDTE, QDTE, RDTE, but we're going to focus on RDTE. You see here 41 cents, and you saw Roundhill's trading at $43-ish. So it's almost 1% well, they tell you right here it's 0.9%. That make it easy for you. So it's almost very similar. So, on first glance, you're thinking to yourself, oh, the premium, that you got relative, the dividend you got relative to the price seems a little bit better in the Defiance funds. But then I always tell you, always look at total return. So let's go ahead and look at total return. We're going to compare the Russell 2000 to the Roundhill RDTE, and we're going to compare it to the Defiance IWMY. And that kind of gives me an idea to compare apples to apples. So we're going to start first with the benchmark of IWM. IWM is the Russell 2000. So I'm looking at total return because, yes, there is a little bit of a dividend they do give in the Russell 2000, so you need to factor that into consideration. And right now we're looking year over year, and you'll see year over year, the total return of the Russell 2000 is 30.21%. Now we're going to compare it to the IWMY year over year, and you can see the total return is not 30-something percent. It's actually less than half than that. It's almost 14%. So yes, a lot of people like to make fun of this fund because you see here the orange, the fund just keeps going down in value. But if you factor in the blue and you want to really look at the total return to get the complete picture, it's, people laugh and say it's a bad fund. It's not as bad as people say it is, and I think it's not as good as people say it is. I think it's somewhere in the middle. And this doesn't obviously factor in, none of this factors in if you compound it week after week, but total return is almost 14%, and this is year over year. And now let's look at the Roundhill fund of RDTE. Now, RDTE has only been around since September 10th, so it's not fair to really. I'm going to go ahead and adjust the time frames of the other two funds to September 10th, so we have not just a total return apple to apple comparison, but we also have the same timeline, because it's not fair to compare a timeline of 12 months to a different fund of a timeline of about 2 months and a bit. That's really not fair. So we really want to have a clarity in our vision. But let's just look at this number. And since this fund opened up, and since it launched, it total return positive of 10.85% and price appreciation of 4.76%. So remember, 10.85 in this period. And we're going to go back. I'm sorry about the back and forth, but you really got to compare this with the proper metrics. So we're going to go to the Defiance fund, and you go to the calendar, and we're going to go to September 10th, and then it kind of shows you total return. Remember, of the Defiance fund is 3.35% in this timeline. Let's compare the 3.35 of Defiance to the actual IWM, which we're using as the benchmark, rightfully so. So let's go to September 10th, apply. So instead of 3.35, the benchmark of IWM returned a total return of 11.9%, more than 3 times that of IWMY. So somebody who's looking for total return including dividends, the portfolio of IWM would have over triple performed compared to IWMY. But if you compare that to the RDTE, very, very close. So this is an income fund that also provides weekly payments into your account. And this almost gives you the same, has demonstrated a very, very close return to the underlier in total returns. So that's the reason why I personally invest into RDTE. I'm not making fun of anybody who invests in IWMY. Everybody has their own journey and their own reasons for investing in these funds. I'm here to explain to you my reasons why I prefer RDTE as my 0 day to expiration cover call fund. The other one's not a cover call fund, but 0 day to expiration option fund that generates income in the Russell 2000. Anyways, I hope you guys enjoy. This is the Working Investor over and out. Have a wonderful day.